Hello, this is Patrick White from AA Commodities with your Wednesday, June 24th morning market update. Overnight, we've got outside markets lower. The September S&P is down 20 points at 3098. The Dow is down 220 at 25,800. The stock market lost a small amount after early gains on the overnight as the market is having a tough time dealing with the recent spike in COVID cases around the US as things continue to reopen. Traders fear that a shutdown for some states individually could be going back into effect again. The federal government continues to reiterate that they don't want to close the entire economy again. The September S&P continues to trade in a sideways trading range between 3150 and 3050 right now as traders are continuing just to show indecision about the recent spike in cases versus the recent recovering economy. Grain markets are lightly lower overnight. July corn is down a quarter of a cent at 324 and three quarters. July beans are also a quarter cent lower at 874 and three quarters. July Chicago wheat is down a half a cent at 485 and three quarters. And corn has found some sellers here as the continued good weather forecasts are just aiding bears and continuing to inspire some liquidation here. The July corn chart has trend line support at the 325 level, and there's been multiple instances of support at that level. And if we lose that, it could cause us to fall down another 10 cents down to the 315 to 310 area. And I'm watching that closely here today. Overnight, there is a report that recently China has sold up to 4 million metric tons of their corn stockpile. This comes before they go on a 4-day holiday starting tomorrow. And typically, China tries to replace what they sell, in imports. And there's an outside chance that they could source that imported corn from the U.S. So that'll be something that we're also looking at going forward here. July soybeans are still having a mostly sideways trade here. The good weather forecast is keeping ideas around stronger demand for the near term just in check. The Chinese holiday starting tomorrow is going to put purchases on hold for the near term, and traders will continue to watch for the special demand reports out here this morning and then starting again next week. So we're still in day 4 of the recommendation for cash sales of soybeans to be sold. Producers are recommended to have 35% of their new crop bushels marketed and another 25% of their new crop production protected with puts here. So that's all I've got here for today. Have a productive day out there, and remember that there's significant risk in trading futures and options, and it's not suitable for all investors. For more information on commodity markets, give us a call, 712-262-7606. Thanks.